We're jumping straight into Big Bear today. Everyone is watching the price action, but the real story is the national security AI inflection.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds today, make sure you hit subscribe and the like button. We really try to simplify your market research so you don't have to spend hours digging.
Yeah, we do the heavy lifting for you.
Right. So looking at Big Bear, we have this massive tension right now.
Massive.
You've got this stock that is up, what, like 141.9% over the past year?
Almost 142%, yeah.
Right, just a massive gain. But then, and this is where it gets weird, you look at their actual recent revenue reports, and they are struggling.
They really are. It's a total paradox for anyone looking at the ticker.
It's the classic battle, current numbers versus future promises.
Right. And usually, the market wants to see the proof in the pudding today. But here, investors are they're completely ignoring the late 2025 financial statements.
They're buying the narrative.
Exactly, the narrative. And we need to figure out why they're willing to overlook a shrinking top line. So let's start with the bull case. I call this the war chest and the pivot.
The war chest. I like that. And that's not just a metaphor here, is it?
No, not at all. It's literally the most important number on their balance sheet. Big Bear ended the third quarter of 2025 sitting on $715 million in cash and investments.
$715 million. I mean, let's just pause on that.
It's huge.
For a tech company of this size, that isn't just a cushion, that is a fortress.
It completely changes the risk profile. Because normally, with these speculative AI plays,
They run out of money.
right, they have a cash runway problem, they burn through their cash trying to grow, and then they have to issue more stock.
Diluting the shareholders.
Exactly. They go begging to Wall Street, and the stock tanks. Big Bear does not have to do that. They announced a massive debt reduction on January 2nd, 2026.
Right. They paid down a chunk, even though they still have about $105 million in debt.
Yeah, but paying it down shows confidence. This cash pile isn't for paying dividends. It's for aggressive scaling. They are buying growth.
Which brings us to the pivot. Because having cash in a bank account doesn't double your stock price.
No, it doesn't.
You could just buy a treasury bill for that. It's about what they bought with it. Let's talk about Ask Sage.
The Ask Sage acquisition is the absolute centerpiece of the bull case right now. They finalized it for roughly $250 million.
Which, on the surface, spending $250 million when your own revenue is shrinking?
It sounds reckless.
It sounds totally reckless.
But you have to look at what they actually bought. They didn't just buy a software platform. They bought a Rolodex,
A customer list.
a highly restricted customer list. Ask Sage brings in over 16,000 government teams. And in government contracting, distribution is everything. It's the valley of death for defense tech.
Yeah.
You could have the smartest AI in the world, but if you don't have the security clearances,
The authority to operate.
right, the authority to operate,
Yeah.
if you don't have that, you can't get your tech onto a general's iPad. You have zero revenue.
So by buying Ask Sage, they are essentially unlocking federal distribution overnight. They bought immediate relevance in the government sector.
Exactly. They bought the VIP pass to skip the line.
Okay, so they have the distribution, but let's talk about the tech itself because they are competing with some giants.
Yeah, the moat.
Right. You've got Palantir doing broad analytics.
Yeah.
You've got C3 focusing on enterprise. What is Big Bear actually doing differently?
They have a very specific niche. They call it mission-grade AI.
Mhm.
And the magic phrase here is edge intelligence.
Edge intelligence. Break that down for us because it sounds like marketing jargon.
It does, but it's crucial. Think about ChatGPT. Your data goes to a massive server farm in Virginia, gets processed, and comes back.
Which is fine for writing an email.
Right. But if you are a drone operator in a combat zone or a border patrol agent in the middle of nowhere,
You don't have time for a loading screen.
exactly. Latency gets people killed. You might not even have an internet connection. The edge means the computing happens right there on the device.
On the camera, on the ship.
Yes. And Big Bear's platform, Faraskin, does exactly this. It's actually already deployed in over 25 airports and seaports. It scans cargo and people in real time right at the checkpoint.
And the brilliant thing about that from a business perspective is what it does to switching costs.
Oh, the switching costs are astronomical.
Right, because once the Department of Defense integrates a system like their Conductor OS into a shipyard,
Or Shipyard AI, yeah.
you can't just rip it out.
No way. It's integrated into their training, their security protocols. It protects Big Bear's market share. It makes the revenue extremely sticky.
Okay, so we've got the cash, the Ask Sage distribution, and this sticky edge AI. And they aren't just stopping at the military anymore either.
No, they are expanding. This is where the Maka Technologies partnership comes in.
Right, from late January, January 28th, 2026.
This partnership is huge because it moves them heavily into border security and custom solutions. It massively expands their total addressable market.
Because border security isn't just a military thing, it's global infrastructure.
Exactly. And all of this explains the momentum. It's why the stock has outperformed the Zacks computer and technology sector. Analysts are even improving their EPS expectations.
Yeah, I saw they tighten the 2026 expected loss to just 25 cents per share.
Right. So the bulls are seeing a company that is building a juggernaut.
And there is a massive but here. We need to get real about the present day
Yep.
because we have to talk about the bear case.
We do. We're calling this the growth gap and execution risks.
Because if you look at the actual financials right now, it is ugly.
It's really ugly. Q3 2025 revenue came in at $33 million.
33 million. That was down, wasn't it?
Down 20% year over year.
In the middle of an AI boom.
Right. Everyone else is posting record growth, and their top line shrank by a fifth. And gross profit declined 31%, down to just $7 million.
So what happened? Did the tech break?
Management blamed lower Army program volume. Basically, their biggest legacy customer just bought less from them.
Which is a huge red flag for that sticky revenue theory we just talked about.
Exactly. And it gets worse because they lowered their full year 2025 guidance. They dropped it to between 125 and 140 million.
Wow. From what?
It was supposed to be around 158 million.
So they are actively shrinking on paper.
Yes. And this creates a massive show-me problem. The whole bull case relies on this strategic shift to Ask Sage.
But they haven't proven they can execute it yet.
Right. There was a great piece on Seeking Alpha on February 18th, 2026. The headline was literally, Strategic Shift Emerging, Execution Unproven.
Because integration is hard. You buy a company for $250 million, you get 16,000 government teams, but you still have to upsell them.
You have to convert them to paid contracts. If you don't, you just bought a very expensive paperweight. Investors are betting on a plan, not a result.
And when you're trading on a plan, the stock gets really volatile. We saw that on February 12th.
The Hunterbrook Report.
Right. A critical report came out and the stock traded lower immediately.
Because there's no floor. There are no massive profits catching the stock when it falls. It makes retail investors incredibly nervous. Any scrutiny adds wild volatility.
And let's not forget who they're fighting for these dollars. You mentioned Palantir and C3 earlier.
The giants.
Right. If you are the Department of Defense and you're trying to consolidate your vendors,
Which they always want to do.
are you going to go with the 2-ton gorilla like Palantir or the smaller fish that just had to lower its revenue guidance?
It's an existential risk. Big Bear is fighting for scraps at the same table as companies with bottomless pockets.
And on top of all that, the stock is not cheap.
No, it is trading at a massive premium.
What's the forward PS ratio right now?
It's at 18.03.
18 times forward sales. So if the broader tech sector catches a cold,
The Big Bear gets the flu. We saw it on January 29th, 2026. The tech sector had a bad day, and Big Bear underperformed even the decline.
because at 18 times sales, you are priced for absolute perfection.
Exactly. So that's the setup. You have the war chest and the moat on one side, and shrinking numbers and execution risk on the other.
So what are the triggers? What do we need to watch in 2026 to see who wins this tug of war?
First thing on the calendar is the Q4 2025 earnings date. That's expected in early May 2026.
And what's the metric there? Just the revenue?
We need to see if they are hitting the low end of that lowered guidance. If they miss that 125 million mark, it's going to be brutal.
The market will punish them?
Severely. But beyond just earnings, there are huge legislative catalysts out there.
Right. Let's talk about the one big beautiful bill.
This is massive. Congress is looking at potential funding of $6 billion, specifically for border AI and biometrics.
$6 billion.
And another $16 billion for the military. If that funding flows, Big Bear's Verascan and Conductor OS are prime candidates.
Because they have the Ask Sage connections now.
Exactly. It's a binary event. If that bill passes, the money starts raining down.
But there is also the workforce side of things, right? The legislation from February 13th.
Yeah, the bipartisan AI training tax credit bill.
How does a tax credit help Big Bear?
It helps them scale. One of the hardest parts of selling AI to the government is that the government staff doesn't know how to use it.
Ah, so they need training.
Right. If the government gets a tax credit to train their workforce on AI, it makes it much cheaper and easier for them to adopt Big Bear systems. It lowers the barrier to entry.
That makes perfect sense. But ultimately, it all comes back to integration milestones, doesn't it?
100%.
Right.
The market needs to see those 16,000 Ask Sage teams actually generating revenue.
We need press releases. We need to see contracts being
The
signed.
silence is a red flag here. You have to show that the pivot is working.
So bringing it all together for the lowdown, this is a classic inflection play.
The ultimate inflection play.
You've got a company with shrinking current revenue down in that 125 million range for the year, but they have a massive war chest of $715 million.
And they just spent $250 million of it on Ask Sage to try and catch this massive wave of national security spending.
Exactly. So here is the final provocative thought for you to take away today. With $715 million in the bank and the government clearly scrambling for border AI solutions, is Big Bear's current revenue drop a glaring warning sign, or is it just the calm before the contract storm?
That is the multi-million-dollar question.
Thanks for listening to the Easy Money Show. Keep your eyes on the tape.